In my conversations with a lot of investors, one of the most frequently asked questions is, how do we choose an AIF or alternate investment fund which is right for them, given their risk and return profile? In my experience of managing this fund, or one of the largest long-short funds over years and across market cycles, there are three important findings which I would like to summarize for you. One of the most important parameters, and of course that goes without saying, is the return objective of the fund. Now, while it's very easy to say that, the investor has to be very careful in understanding what is the bucket of investments they are looking for. Meaning, when you do an asset allocation, whether are you looking for equity investments or a debt investment return. Because once you do that, is what follows the second important point, which is the associated risks with that particular strategy. And when I talk about risk, there are three again important factors within the risk itself. The first one being the liquidity of that strategy. When I talk about liquidity, there are various products which are of 5 years to 7 years product, and there are various strategies which doesn't have any lock-in periods as well. So while we look at returns, look at the underlying liquidity and the need of money which you would have under your financial goals. The second important aspect in the risk itself is to analyze by various important ratios on how the strategy has performed earlier. In that respect, there are two important parameters again. One is the volatility at which the return is generated, and two, the drawdown profile of that particular strategy, meaning that how much I have lost in a particular month in that strategy. These are historical ratios. While they are important, equally important is the third aspect, is basically the scenario analysis. The past track record is in a particular market condition. When you invest into a particular strategy, you also have to analyze that if the markets are up by 20% or down by 20% one fine morning, what is the stress I am taking into that strategy? And that will define which bucket are you looking to do that investment. But while risk and return are important, you have to be very, very careful and ensure that the track record which has been delivered till now is going to be delivered in future as well. And how do we ensure? Is that the performance of the strategy which has happened till now is through an institutional process of investments, meaning that is something which will be repeated again and again in future. So to summarize again, three important aspects of looking at alternative investment funds is: one is risk, the second is return, and last but not the least is the process of investments, which gives you the consistency of performance. Thank you very much. And I hope this was insightful. And I would love to hear from you any questions you have or any important markers which can continue this debate or discussion.